Thank you so much for joining our webinar today. My name is Justin Fry. I'll be the host of the webinar. Our speakers today in this OneTick Today webinar, we have Jeff Banker, who is SVP of Market Development. Jeff joined OneMarket Data in 2013 and is focused on expanding the firm's capabilities and assets. Jeff previously served as the Executive Vice President of Interactive Market Data and Trading Solution Group, where he was responsible for a $300 million P&L, providing content analytics and managed infrastructure to the trading and wealth management sector. Peter Simpson is the OneTick product owner. Peter is an experienced analytics product manager with a history of working in and with fund managers and exchanges in London and New York. Shailesh Dwivedi is the head of buy-side regulatory solutions at OneMarket Data. Shailesh oversees OneTick's buy-side offerings to ensure OneTick clients meet and exceed requirements across the global regulatory environment. He previously served as vice president at Credit Suisse, where he managed and advanced the firm's cross-asset tick data platform. Victor Naroditskiy is one of the leaders in the regulatory solutions development team, and he leads the development of highly scalable surveillance and best solutions covering MAR, MiFID II, SEC, FINRA, and INROC regulation. Lastly, we have Phil Perrault. He's a senior pre-sales engineer at OneMarket Data, responsible for POC engagements with blue chip banks, hedge funds, global exchanges, and large mutual funds. Our webinar today, we have two sections. The first of all is an overview of the company, which Jeff will present, giving some metrics and trends, some customer numbers, company growth, and a quick overview of the product as it sits today. We then have some excellent contributions to the OneMarket Data team on products and demos, ranging from market access and volumes all the way through to real-time stream processing, trade market surveillance, crypto, and pandas like API and machine learning. At this point, I'm going to hand over to Jeff for a company overview.
Thanks, Justin, and good morning to everybody, and thank you for joining our webinar. OneTick is a leading software provider of time series analytics, coupled with deep capital markets application expertise, and integrated with curated and aligned time series data, yielding what we believe is a unique value proposition to the marketplace. The foundation of our product strategy is OneTick, a high-performance, purpose-designed time series database optimized for high-volume market data collection, aggregation, and analytics, supporting a broad set of capital market applications. Within our OneTick platform, we have curated content, which is on the gray box to the left there, indicating the 200 plus global sources of exchange data that we have, aligned with reference data and corporate action data. To the box on the right, we use OneTick software to pre-calculate derived data, such as bars, TWAPs, and VWAPs, as well as aggregating over 33 different European sources to come up with an aggregated trade and quote data set. To the red box on the right, we use OneTick to develop complex applications such as aggregated order books and transaction cost analysis tools, all of which can be accessed using Python, web dashboards, APIs, and the OneTick Query Designer. In addition, as outlined in the blue box below on the right, we have a set of regulatory solutions which leverage the high-performance capabilities of the OneTick software, which Shailesh will demonstrate in a few minutes. Our client base represents a broad set of capital market participants, including regulators, global banks, high-frequency trading firms, hedge funds, and exchanges. Our unique value proposition within a very competitive market and crowded marketplace has yielded broad adoption from some of the top firms across several verticals, as illustrated in this slide. Over the last 12 months, we've seen an acceleration of new clients and applications across all of our product segments, including a large proprietary trading firm, which is deploying OneTick to support over 100 different PMs. The FCA, the Financial Conduct Authority, which is the UK regulator overseeing 50,000 different financial services firms in the UK, has selected OneTick for surveillance. A top ETF sponsor is outsourcing their infrastructure in support of ETF analytics. A top 5 Canadian bank deployed OneTick for order book analytics across all of the disparate Canadian markets. And a top U.S. equity exchange relies on OneTick to process over 500 billion messages per day to identify trading irregularities. So what are the competitive differentiators driving the acceleration of client adoption? In addition to the unique capabilities of the OneTick software, we believe there are 3 key differentiators: integrated real-time and historical data, analytics on a scalable cloud platforms, our deep bench of experience across regulatory products, including leadership from Goldman and Credit Suisse/UBS, and data expertise in time series content and analytics. In summary, OneTick is a leading software provider coupled with deep capital markets application expertise and integrated with curated and aligned time series data, yielding a truly unique value proposition, which we will now illustrate through a series of short demonstrations. Back to you, Justin.
Great, Jeff. Thank you so much. Let's move on now to the demonstration section of the webinar. So we have a variety of presenters here from Peter and Shailesh, Phil and Victor are going to walk you through various different elements of OneTick. Certainly not everything OneTick has to offer, but many of the leading solutions that we have available. So we're going to start off with Peter's going to be talking about market data access and volumes.
Hi, I'm Peter Simpson, product owner for the OneTick software platform. I'm going to focus on our cloud market data service, OneTick Cloud. Now, we host 407 different databases for market data, typically corresponding to a database for each different exchange or group of exchanges. Now, here I'm looking at how much data we're storing since the start of 2023. We can see as we go through the year, on a daily basis, we're storing around 1.5 terabytes of data. We can see there are some days where there are drops, which typically correspond to US public holidays. Around here, we have Easter. So if we sum up all of these days, as of up to the 14th of June, we're up to 164 terabytes of data that we've collected. And if we then go over to the full year, we're going to be kind of over 300 terabytes. If you drill into a particular day, we can actually see that the biggest database by far is Opera. Then the next biggest is NiceTac. Opera is around 1.3 terabytes a day. NiceTac, 30 gig, and it's around 2% of the total storage that we're running. And this goes through all of the databases that we're processing, whether they're storing trades or quotes or level 2 data, top 10 levels, or full level 3 data market by order. Now, rather than you storing all of this data, you can just connect to OneTick Cloud and pull back the data using our APIs. You could use our OneTick APIs through our proprietary tools, our executables, or through languages, including Python. Or you could just use our REST API. And here, I'm just using Python to call the REST API. I've got the REST URL, my username and password, the query that we want to run, which could be a query that has been generated for you, or it could be one of the example queries, the parameters I want to pass in. So I want this particular symbol, I want trades on the database LSE, my start and end of the time range. As I'm specifying a time range, which time zone I'm asking for, the response output, and how many rows I want. That gets generated into a URL, or I can just hard code the URL. Then I'm just using the responses module to run the query, get back the responses, compress CSV, decompress it, then convert it into a data frame. So if you look at this, run the module, come out, get back the data into a data frame, then display it in matplotlib. Thanks to you for watching. Please do send us any queries you have, whether it's using the REST API to hook into your own data or into OneTick Cloud, or using Python or any other API, whether it's C#, Java, etc. Now on to the next OneTick demonstration.
Thanks, Peter. Next demonstration comes in the form of overview of the solutions product suite from Shailesh Dwivedi, Head of Regulatory Solutions.
Hello, everyone. This is Shailesh Dwivedi, Head of Buy-Side Regulatory Solutions at OneMarket Data. Today, I'll start with providing a quick overview of all the packaged regulatory and analytics product offered by OMD Solutions. We have developed these solutions by leveraging the advanced data management and powerful analytical suite of core OneTick in the center of the slide on my screen, enhanced by an easy-to-use pandas like API, and combined with the cloud-native approach and resident data. All of these solutions are built to provide the scalability, elasticity, and resiliency at a low cost of ownership to all our customers. Starting from the top left on the slide is Trade and Market Surveillance Platform, our flagship solution, trusted by a broad range of financial institutions, from tier 1 banks, central banks to boutique brokers, from institutional asset managers, private banks to hedge funds, and from world's largest exchanges, market makers to prominent regulators. We provide a platform that can be seamlessly used by officers across multiple lines of defense in an organization to achieve their surveillance duties. And all this without compromising the ability to control who can see and action what alerts and underlying transactions. By adopting such a streamlined platform, we help many of our customers to reduce their compliance total cost of ownership multifold. We offer more than 70 surveillance scenarios out of the box, spanning across market abuse algorithms, insider dealing detection, portfolio surveillance, personal account dealing, suitability monitoring, and some control room alerts. The coverage is for global regimes, cross-product and cross-market. Our surveillance offering comes with a sophisticated case manager for alert disposition, supporting customer-driven workflow and reporting. Additionally, we provide with an end-user controlled, easy-to-use alert calibration sandbox. This allows surveillance effectiveness officers to run and analyze their what-if scenarios without creating workload on their technology teams. Based on customer business applicability, we supplement surveillance with order book replay functionality. This will be demonstrated by my colleague Peter a bit later today, trader account profiling, etc. On the top right, we have our award-winning and time-tested best execution and TCA solution with an extremely performant backend and interactive visualization. We are proud to be one of the most nimble product provider in this space, aligned with the evolving business, market structure, and regulatory requirements. Best Execution Platform covers a wide range of quantitative and qualitative execution evaluation metrics. Some of the key metrics include market impact, implementation shortfall based on different benchmarks, opportunity cost, effective quoted spread, US 605, 606 type metrics, etc. Additionally, we supplement this suite with solution for MiFID II driven monitoring and reporting requirements, such as RTS 6, real-time algo monitoring, RTS 8, entity level top 5 venue broker report, and others. On the bottom left, we have our fastest growing product in terms of use cases and customer demand, Market Data Lab. It is analytics as a service and data as a service environment that can be accessed through gated Jupyter Hub setup for all sort of on-demand market data analytics using pandas like API. It is backed by OMD's good quality and reliable tick data collected from 200 plus global exchanges with market depth and 10 plus years of history. This is a modern, high return on investment solution to overcome the traditionally high cost tick data collection, management, and computational problems. Victor, my colleague, will demo this in a bit. And finally, on the bottom right, last but not the least, we have our machine learning MLOps platform. It provides data scientists, quant researchers with a machine learning environment suitable for time series high frequency data. This can be used for tick data feature extraction, selection, hyperparameter tuning, model comparison, and much more. Again, Victor will show this in action in a bit.
Super. Now we're just going to move on to Shailesh talking about trade and market surveillance.
All right. Next, let's see some of these products into action, starting with trade and market surveillance. On my screen now is the main triage dashboard for surveillance alert. This is a lightweight web-based dashboard. On launch, the start and end date is set to the previous working day. For demo, I will set it to a bit farther in the past. You can set the time zone as per requirement. On clicking the run button, the summary table is populated, which gives you the alert count based on the category. There are 3 category levels which can be chosen through this drop downs over here, and any categorical field in the data can be used here. So I'll leave the first one to be alert type. Next, I'll change it to, let's say, symbol. And now you can see there is a drop down within each of this alert type. Looking into the layering and spoofing, we now have the alert count based on every symbol over here. We can do the sorting or filtering on any of these grids. If I sort it by count, we now see that layering and spoofing has 418. Let me actually reverse count it. The largest number of alerts is for this JE symbol for Jersey. On the top right, we have the alerts table. It is showing the records corresponding to the selected row in summary. In this case, it is showing all the 418 layering and spoofing alert in the queried interval over here. This table provides 2 different types of information. First, which is consistent across the different scenarios. So for example, the fields which you will find for layering and spoofing, war spread, ramping, etc. These are the fields such as the timestamp of the alert, security of the alert, source, that is the data source from where the alert is generated from, and the score of an alert, like status of the alert. The other set of fields over here are applicable only for the scenario in question. So right now what we are looking at is a layering and spoofing, and hence we will see the other set of fields which corresponds to layering and spoofing. For example, this would have the things like what was the first cancellation time, what was the last cancellation time. Also, in addition to that, we'll have the details of all the thresholds that we have set for a layering and spoofing. So for example, what is the value of the max fill delay millisecond? That's the purpose of this alert table. Okay, so now let's take a closer look at one of this alert. However, before that, let's understand layering and spoofing. So in very simple terms, a layering and spoofing is a market manipulation activity where a bad actor would place one or more non-bona fide orders called influencing orders at one or several prices on one side of the market to manipulate the market supply and demand such that the manipulator might benefit by trading the benefiting order entered on the opposite side and then exit the influencing orders. With that in mind, let's select one of this alert from here. And now the rest of the details on the dashboard is populated. The details table in the center left of this dashboard provides the order and trade economics for all the transactions that lead to this particular alert. It has the details of trade timestamp, order ID, side of the order, size, price. If you take a closer look at this, you'll see that there is a lot of buy orders which are placed around a sell order, which is a bona fide order, and the buy orders in this case are the influencing orders. We have a lot of new order events, a sell new order event, again more buy new order events. Then the sell is executed, which is our bona fide order, benefiting order, and then all the other influencing orders, the buy orders here, are cancelled out. So this is a typical case of spoofing and layering. On the center right of this dashboard, there is a description panel. Let me expand that, which is applicable to all the grids and graphs over here. It gives you an English level understanding of what the alert is about. It says a layering and spoofing is generated for a particular account ID for a particular instrument. It tells you there was a 4-layer spoofing in this case. We saw there were 4 influencing buy orders. It gives the information about what were the price levels at which those 4 different influencing orders were placed, what was the price for the benefiting order, how long the influencing orders were live after the benefiting order was executed, etc. In the bottom part of this, it gives you information about the thresholds that we have set in the backend for the layering and spoofing scenario. Let's minimize this panel now. On the bottom left, we have the most interesting part on this dashboard, by the way. We have a market timeline chart. Market timeline is a self-explanatory view of everything that has happened around this alert in terms of our own transaction data as well as in the market. Let's expand this. We have the market bid and offer plotted as the horizontal lines over here. The vertical bars is the market volume at different point in time for the security in question. And the circles, triangles represents the cancellations and new order events and any executions that has happened. By default, it is showing you the transactions for this particular security in this time interval. The time interval can be controlled over here through this option over here. And if you're interested in looking only at the transactions which is particular to this alert, we can check mark this box. And now we see only the buy side orders and the sell side orders, which is corresponding to this particular alert over here. It's basically the representation of everything we saw in the previous details table that we were looking at. And the market timeline chart can be zoomed into to any granularity that is present in the data. Let's zoom around this particular window. And now we can see that this is the buy order that were placed. I think it's an overlapping. There are 2 buy orders here. There's another buy order. There is a sell order, which is our benefiting order. We have an execution in the sell, and then all the buy orders are cancelled out over here. The circles over here are the cancellation. So this is a representation, and when I double click, we zoom out of that again. Let's minimize this panel back. So this is the market timeline when for the high frequency events, when you're looking for within a day. We also have a multi-day pattern over here, and this is applicable mainly for a long horizon scenarios. For example, portfolio churning, portfolio window dressing, etc. Okay, so before I talk about the workflow, let me explain some generic functionalities of the dashboard. First, it is possible to extract the information from any of this table, grids, or market timeline chart into an external file, for example, a dump to CSV and Excel. Column settings provide the functionality to the users to be able to enable, disable some of the columns or resequence them in the way they would like to see. Third, it is possible to put a filter on any of the columns in these grids. So for example, if I want to put a filter over here, it accepts regex-like pattern. So I will put a pattern of anything like EXCH. That leaves us with all the records where source is OB_exchange. Fourth, any filtering and sorting or any category that we have set over here, all of this information is saved in a user-specific profile. So next time you launch the dashboard, that will be remembered. Of course, if you want to clear off the filter, you can right-click on the column again and say disable filtering or clear filter, and that will take away the filter. We have a search functionality as well. So as soon as, let's say here, I want to start looking for any field with currency, I can just start typing currency, and that will give me the field over here. That is case insensitive. Okay, the workflow tab on the bottom right of this dashboard gives the ability for 2 things. First, it provides you with an audit workflow of everything that has happened on an alert so far. Also, it provides user with an ability to take any quick set of actions on alert or set of alert. This is very handy if you want to, let's say, close a bunch of alert with the same reason, and you don't want to wait to investigate that in a case manager, which is the next I'll talk about. It can be done quickly by selecting the status over here, let's say progressed. By default, the comment that is tagged to a status is populated. It is a free text, so you can add on to that, and you can click on the update button. Once you click on the update button, it will reflect the status over here in this dashboard, and also it will reflect the status in the integrated case manager, which let's take a look at that. And CMS is the case manager. When I click on this, the case manager brings up the exact alert at which I was on my triage dashboard. And over here, it will reflect the current status of it, and it will allow me to take new actions on this alert. There is a workflow that is defined. Now, this is a very funny looking workflow, but the workflow basically gives the ability to define what set of action can be taken once an alert is generated. And we can define different set of workflows for different groups. You can change the assignee, you can change the supervisor for the alert which is generated. This link is giving you the link back to the triage dashboard. A description is a free text of whatever you want to add as a comment from your investigating officer side. Attachments. So the case manager allows for all sort of attachment into the dashboard. If the attachment is readable, for example, a readable PDF, we can also use the search functionality in the case manager to look through that text. And history, it is the more detailed history of everything that has happened on the alert so far. And then you can move the alert into the next possible event based on the workflow. Right now, I'm going to just discard and exit this. And this is set of all the open alerts on the case manager. In addition to the open alerts in the case manager, what we can also do is we can create a matter. A matter is a group of alerts when you want to investigate them together. Or we can create a report. Reports are usually a kind of a management information that you want to generate based on categorical value in the data. And it is also possible to run those at a regular interval. For example, this first one was sent on this date, and the next case scheduled to run here. And it can send you a download copy, or you can email it to some of the users. That is very quick view of the case manager. It is much more powerful than that, but I'll stop at this right now. And thank you everyone for taking out time to listen to me. I will pass on to our next demonstration now. Thank you.
Thank you, Shailesh. That was very comprehensive. Now we're going to look at our order book replay. Over to you, Peter.
Hi, I'm Peter Simpson, the product owner for the OneTick software platform. Today, I'm going to focus on our order book replay product, which typically is used in a surveillance context, but doesn't have to be. We actually have two products. One is for an exchange or regulator with fully attributed data, including dark flow. So both dark order books and dark components of icebergs, and including aggressive flow. And then one for a broker, where we use the customer's own flow, typically delivered via fix, together with level 3 market data for their selected venues. Now, we could be looking at a single venue, or we could be creating a consolidated book based on a selection of venues. In the case of Canada, there's around 10 lit books. When we're getting into derivatives, it's typically one exchange. So on the broker view, we can select the MIC we're looking at, select the time range, either look at just the instruments which we traded, or look at all instruments. This is looking at data from last November. So I'm going to pick as liquid as possible. Doodle futures. Let's run this. Now we're pulling back the data on the future. We can see the BBO across the day. We can see events specific to the day. These could be alerts, exceptions. These could be news events. It's basically data that we're piping through. The quantity field, which could be normal trades, they could be implied trades, they could be trades from our broker, or they could be from subsets of the broker. So they could have particular multiple MPIDs, multiple accounts, client IDs, entering traders or executing traders. And we can see the flow from the broker here. So let's zoom into this particular time period. We see the broker's flow. Let's zoom in again. Let's just look at this period where we've got lots of trading. We just see the broker's trades. We can see how we're looking in the book. Let's look just at this one area. As we zoom in, we see the order messages at that particular point in time. And we can step through the book. So I'm now on a new. This new liquidity has been added at about level of 6. Another new. Now that order's been cancelled, and we can click through, either by clicking or using my arrow keys or clicking buttons here or here. Let's zoom in again. Now we can see order events. So the order was entered here, and then it executes here. Now, if I just remove the just broken messages, we can see all of the order messages within this small time period. And we could show every message, or we can show the messages down to a certain number of spreads away from the BBO. Now this kind of section we can maximize, we can tear off into another window, and we can step through message by message again. We can give more screen real estate to what's happening in the book. And that's the same for every window. So if we're looking at the book at a particular point in time, we can step through the messages. Here we're showing that we have a new order here. This order is in blue because it's an order that's on the book from our broker. If we had orders on the other side from our broker, they'd be in orange. Here we're seeing the size of each order proportional to its remaining quantity. If we wanted to have everything the same, we could do that. If we wanted it by side, as a traditional ladder, we could do that. We could change the color to either look at the order state as I have now, or look at if I've got flow from different accounts, color them that way. And I can be looking at the top 7 levels of the book, or the top 27, the top 100. I'm choosing what's relevant at all times. So we can see here, as we focus in, we can see the new, the cancel. I have an aggressive order coming in, and CME will provide the aggressive information for a fill. And then it's filled. Then I have the passive fills coming through. Thank you for watching. Please do send us any queries you have, either on Order Book Replay for a regulator or an exchange, where we have fully attributed data, or Replay for a broker, where we're relying on public market data, level 3 data from the exchange and your own flow. Now on to the next OneTick demonstration.
Thanks so much, Peter. So Peter's actually going to be the next demonstration we have lined up today, real-time and stream processing for algo monitoring.
Hi, I'm Peter Simpson, product owner for the OneTick software platform. I'm going to focus on stream processing. Now, we just don't have to use OneTick to analyze historic order flow, whether that's intraday or going back the last years. But we can use it live for monitoring, whether that's monitoring the market or trading flow. And this can also include algo monitoring as covered by MiFID RTS 6, which is what I'm showing here. So I could be looking live at today, where I'm subscribing to new alerts coming through, or I could find a custom range and look back historically what activity has taken place. I have a set of alert types that have fired to find how many are open or how many have already been closed. Within the particular alert, I have, is it open, what metric type, is it running, style, the threshold that we have, and then what was actually breached, then how it was grouped. And then finally, over on the right-hand side, from a workflow perspective, who is it assigned to, what's the current state? Now I can click on alert and show and drill into its details. So is this a one-off or has it occurred regularly? What order flow at the time of the alert? Which order messages cause this alert to be fired? And what's the history of the workflow? Now we have different sorts of alerts depending on how we're wanting to process activity. It could be just based on message counts within a sliding time window. And it could be an absolute style. Now that message count could be grouped by algo ID, so algo type. It could be grouped by order ID or by product if we're looking at futures, or kind of symbol. We could be looking at a percentage of total compared to the total flow within this time window. What percentage is this category of flow taking? Or it could be looking at a sigma difference compared to historic flow within this time window. Historically, how have you performed compared to how we're performing now? Or it could be a percentage difference compared to our average historically, how different we're performing. Now we could use this getting into depth. So how many trades have I had at a particular price within a particular order? So I can see, am I eating into the book? I can look for duplicate orders. How complex I want to do this depends on the logic we write. And we're defining simple logic into a framework so we can keep adding alert types and running them live. And they could be looking at all of the flow or just filtering into a subset. Now, when we generate an alert, we're defining is it enabled or not, and we want to set a threshold. And that threshold, we can then start calibrating it. So running through the day based on our grouping across all flow and identifying what's our maximum value, what's our threshold, how many alerts are we actually generating, and do we want to update the threshold? And then update the value so that the next day, or when we restart the system, once we've gone through an approval cycle, can use our updated thresholds with our enabled alerts, and we can see what's produced, all in real time. Thank you for watching. Please send us any queries you have. Now on to the next OneTick demonstration.
Thanks, Peter. The next demonstration is also by Peter, and that's about storage and compression. Over to you, Peter.
I'm going to focus on storage and specifically compression. Now, when we create a database archive, we can choose from a whole set of compression formats, ranging from no compression at all, through to native, which is the default, through to various others. The new one this year is ZSTT, Z Standard, which came out of Facebook. Now we can use this in our locator by just specifying archive compression type, ZSTD. Let's see what this actually means. Now, if I load in a set of order book level 3 data, so every order message, for BATS Europe for a typical day, that's around 4.3 gigabytes of a text file. So you can see the original CSV here. If I just use a native compression, we get down to about 1.5 gig from 4.3. If we use gzip, we get down to 727 meg. But if we use a standard, we compress further down to 657, which is about 10% better than gzip. So best compression, Z standard. But obviously it's not just about compression. We want to have fast queries as well. So typical query, a really simple query where I'm generating a 1-minute bar across the day for a single symbol. And I've chosen a liquid symbol. I'm storing the data on local SSDs. If I use native compression, which is still compressing down to 1.5 gig, the cold read is up here. The warm read is faster because it knows where to go on disk. gzip, a bit faster from the cold read, but slower than the warm read compared to native. Z standard, significantly faster than gzip, both in terms of the cold read and the warm read. And we're continuing to work on our compression over the remainder of the year to get even faster than we are now, again, using Z standard as a basis point.
Super, thank you, Peter. Now we have one more presentation from Peter, cloud deployments. Back to you for this particular section, Peter, and then we're going to move on to crypto and then on to Victor for some ML and some handles like API. Over to you, Peter.
I'm going to focus on cloud deployment. Now we have a whole set of customers who've either immediately deployed into the cloud or they've migrated from on-premise into the cloud, mostly using AWS, Azure, and GCP. And there are a whole set of reasons why they're using the cloud. One of the primary reasons is around storage. Can I reduce my storage costs? Can I have more flexibility in my storage? Another reason is in terms of machine flexibility. Fire up machines when we need them, when we're not needing them, cut them down. Now, OneTick supports the machines being fired and then opened and then suspended through improved licensing. Historically, it used to be MAC address. Now there's many more options, including license service. And through tiered storage options. We now support the object stores for S3, Azure, and GCS. We have usage analysis, so we can work out which days or which particular databases are accessed the most. So we can profile where data sits, and we can make our locators simple for where data sits through the use of alternative locations. So we can see the object stores. Here is what a locator looks like for S3, for GCS, and for the Azure Blob Store. For alternative locations, we define a primary location, in this case, sitting on EBS, then an alternative sitting on AFS, then a further alternative sitting on S3. So we'll look first at the fastest disk. If the day of archive for that particular database isn't there, we jump to the second. If it's not there, we jump to the third. So we can balance commonly accessed data can be in the most expensive but fastest disk. So now we need to work out what data is being accessed when. And we have our entitlements module for that. Now we set up our entitlements module to actually not do any entitlements, but just log activity. And we can work out when a query is run, how many days from archive are pulled back and what days back compared to the day we run the query. Now I perform this analysis for our cloud for NICE TAC, so US equities. And we can see 18% of queries are running on T0, so within the 24 hours back. T1, more than 24 hours. T2, so a day back, 2 days back, 3 days back, 4 days back, 5 days back. So we can actually see within the first week, we're at kind of 88% of all queries are run within the first week of the data set. First 2 weeks, we get to 90%. And then within the first year, we're at 100%. Anything older is tiny in relation to the number of queries. So we can see actually, this is a very large number of queries for our cloud being accessed for this one database. Thank you for watching. Please do send us any queries you have if you want to work on entitlements or so we can work out when data is accessed, or you want to look at tiered storage.
Super, Peter. Thank you so much. Now we're going to move on to Phil Perrault, who's going to give us a demonstration of some of the crypto capabilities within the OneTick platform. Over to you, Phil.
I'm Phil Perrault, Senior Pre-Sales Engineer at OneMarket Data. You're looking at our Query Designer, Data Explorer, and the demos I'll show you today are based on these 60 exchanges. The ones that are in bold are what you'll see in the demo. Here's some level 2 data from finance, 1,400 plus tokens. Here's some trade data from Coinbase, 4 tokens. Here's some quote data from Binance. Here's the query that we're going to run to show on some of the dashboard and some of the views. And here's the very simple OneTick that will intervalize this data. So count and tick sums, first, last, open, low, high, close, standard deviation, variance, average. And we'll show, here's the data from that query that will be used in the dashboard in a second. Of note, this is the first quarter of 2022, and Ethereum outperforms on the downside and the upside. This year, though, in 2023, that's not the case. Bitcoin sees bigger gains, and Ethereum sees bigger losses. Here's the dashboard. This is our dashboard builder to run on Windows. Very rich widget set. I'm doing line charts here, but I'll show you some heat maps in a second. This is over a quarter of 2022, 2 exchanges, 2 symbols. We're looking at the closing price on a day-by-day basis, standard price deviation, size across the 2 tokens, the 2 exchanges, tick count, percentage change, and the value. And OneTick's very good at slicing and dicing the data, in this case, from 1 month to one, from 1 minute to 1 month. Could have done it in 1 second or 1 year in the book as well. You can then step through these various increments within the dashboard and even replay it if you so desire. Here's the detailing. Right click to save to a CSV. And then here's the summary, across the entire time period. So that was very simple dashboard. Lots of data, still level 1 data. Now here we're looking at 5,000 order books across these 9 exchanges. We're looking at value and balance, finances to grow in most of these categories. Tick counts across the exchanges, total size on the bid. As you can see, Binance dominates for the value on the bid. So thousands of order books, many gigabytes of data in just a single point in time. Last thing I wanted to show you is the Jupyter notebook. And here we're just doing full bars on 2 tokens. And so Jupyter notebook, Python, lots of interfaces. Thank you for your time.
Hey, Phil, thanks so much. Now we're going to switch over to Victor, who's going to walk us through a panels like API and then machine learning MLOps. So over to you, Victor.
Thanks, Justin. All right. We're going to do something that's very simple to do in OneTick, and we'll do it using a pandas-like API that we offer that is unique as far as I know. So you are accessing full power of a tick management platform, but the syntax is very similar to pandas, so it's very easy to learn. So first, we're just going to import this library called OneTick as OTP, and you can pip install it. Then we're going to specify which data we are looking at. So we'll be looking at the trades and quotes data set distributed by the New York Stock Exchange. We'll be looking at trades. Then in pandas style, we'll specify that we just want to see the price and the size fields. And then we'll execute this query by calling OTP.run method that takes the query, the time range. We always need a time range since we're dealing with time series data, and the symbols or financial instruments we're interested in. So we'll just be looking at SPY. Let's execute this. And we're looking at the first 5 minutes of trading on the 20th of April here. There are 17,120 trades in SPY during that 5-minute period. Now let's take a look at the quotes during the same period, and we'll just be looking at ask price and bid price, and we already have an NBBO dataset for US equities. One more thing we'll be doing, we'll create a field called quote time where we'll keep a copy of the timestamp. So there are over 250,000 NBBO ticks during that 5-minute interval. And the next thing that we're going to do is we're going to find the prevailing quote at the time of each trade. So for each of those 17,120 trades, we want to know what was the NBBO at the time that the trade executed. And that's a one-liner in OneTick and in OneTick. It's a join by time method. The first argument, trades in this case, is the one that is getting enhanced with the information from the other arguments. There's only one other argument in this case, the quote stream. When we execute this, we'll get the same number of records as the number of trades, so 17,120, but now each trade has also ask price, bid price, and quote time associated with it. So we can check the quote time to make sure it always precedes the trade time, but it's the last quote before each trade. And so this is one simple example of things that OneTick enables you to do. There are many others. Let us know your use cases. We'll be happy to go over them. There is documentation that's publicly available that takes you through the use cases that we can share with you. And now we're going to use OneTick to get some data that will be used as features in a machine learning experiment. So we'll predict intraday trading volume. So the question we'll be trying to answer is, what is the total trading volume in the next 10 minutes? I'm just illustrating a profile of trading for a single day. It's between 9:30 and 4, and it has this U-shape where there is more trading at the beginning and at the end of the day. And basically, our goal would be to predict, if we are at 10 o'clock now, our goal is to predict what will be the trading volume between 10 o'clock and 10 past 10. And we can use any data from the past to do this. So first we'll specify the input data that we'll be using, and this is using the OneTick Py that I showed you to retrieve data and to create some features. So in particular, we'll just be using 10-minute bars, and we may decide to use standard deviation. And then what we make very easy to do is to define an experiment. It takes just one cell. So we provided helper methods that make it very easy to do machine learning with market data or with tick data in general. So we'll go over this cell. This is just specifying the date range. So we're looking at half a year of data. In this case, we're looking at 5 symbols, but we could also specify all of the US equity symbols. And then we do things like specify how we split our data into train, validate, and test. Since it's time series data, the most natural way to split is by time. And that's what this time splitter method helps us do. We are defining where a validation range starts and ends, and the same for the test range, and then the rest is the training range. The data feeds is what we specified in the cell above using OneTick Py, and then we can specify the pipeline that will define operations that we perform on the market data to create features for the experiment. Calc lags is taking previous values of the same field. So we are predicting volume, lag 1, if it's 10 a.m. now, then lag 1 is 9:50 until 10, lag 2 is 9:40 until 9:50, lag 39 is 10 o'clock until 10 past 10 on the previous working day. And so we'll use those values to predict today's trading volume in the next 10 minutes. In my example, it's between 10 o'clock and 10 past 10. Then we can define other features like the identifier for the current time period. So this would be like 10:00 for 10 a.m. or 09:30 for 9:30. We'll also use the symbol name as a potential feature, and we'll take the log of all of the volume values, so the lagged values and the volume itself. Then we'll just say that we are predicting volume, and our features are all of the lagged values, the identifier of the time period, and the identifier of the symbol. And by construction, they are all from the past, so there is no data leaks. Then we specify the models. In this case, we'll just try 2 boosting models, Light GBM and XGBoost, and we'll do a grid search on the parameters we specify here. I kept it very light, so we're just doing 2 different parameters, so 10 and 20 for number of leaves. Then when we are doing this grid search, we're going to do a walk-forward validation, where we are selecting the best combination of parameters based on walk-forward validation, which is the right way to do it for time series. And we specify the evaluators. So we would see 4 different metrics. When we run this, we get the metrics. We can see the breakdown by each symbol individually. We can plot the results. And we can also compute a baseline, which would just return the value from the previous period as the prediction from the current period. And you can do all of this in one cell. And one last thing that I'll show, and this is where the real power comes in, is if you wanted to tweak the experiment. So say now you wanted to run a bigger experiment where you do a grid search over multiple ranges of parameters, you would just inherit from the experiment we created above. So volume prediction is this cell that we went over. And we are just going to change the models that we used here. We're just going to specify that now there are more ranges for different parameters, and we could create a cluster. This is also something that we provide, an MLOps environment for this, and we could execute this code on the cluster and get the results very fast. Thank you very much.
Thank you so much, Victor. And now we're going to do some Q&A. People have asked some great questions. One question we had here, probably for Peter, someone asks, can archives created with gzip and zstandard compression coexist across the date range?
Yes, we can define different compression periods across different time periods.
Okay, good. Someone has asked some questions around Canadian data sources, which are individual to particular customers. So I don't particularly want to talk about those in public. And so we've answered some of those already. Someone asked, do you connect to Kafka?
I'll answer that one. Yes. And when we're connecting to Kafka, we're consuming messages which could be in various formats. And that could be CSV, could be JSON, could be XML, could be just fixed messages being pumped through, could be Avro, could be protobuf. And if you're using the Confluent version of Kafka, it could be that all your schemas are stored in the Confluent schema registry. And then we can hook into that for parsing and deserializing your data. Some of our customers use Kafka for an internal way of distributing their market data. So obviously the volumes are in the billions of rows a day.
Okay. Someone else asked a common question. Which parts of OneTick are on-premise and which are in the cloud? Can I mix and match?
You just certainly can mix and match. Usually your OneTick instance would be on-prem if you have proprietary or security reasons and or you're collecting real-time data. But we have plenty of clients who then connect to our cloud databases for content that we've curated and stored in OneTick format that they're able to query. So there's a combination of on-prem and cloud configurations. We call them hybrid that can be implemented.
And a question here for Shailesh. Shailesh, what's the sort of approximate time to deploy some of the market surveillance solutions that you demonstrated?
A good question. It depends on the size of the implementation we are looking for. I think for the hosted customers where we are using our environment and just getting the transaction data, it can be somewhere between 6 to 8 weeks. And for the large deployed customers where we run the entire operation, basically getting the data, transforming it, and then generating the solutions, it can range from 6 to 12 months, depending on the implementation size.
Perfect. One last question. Someone asked, what technologies do we use for visualization?
Okay, I can answer that. It's proprietary. We build our kind of dashboards in C# on the desktop. Typically, there's a small number of people who are building displays. I tend to think of them less as dashboards. If you want kind of pivot charts, use Tableau, and much more around trading and surveillance user interfaces. Then we publish them into our OneTick servers, and then they're deployed through a web browser. So it's all kind of HTML5, JavaScript. Then anyone with Chrome can then access and interact with the trading GUIs.
We had a couple more questions have just come in, probably for you, Peter. How are tick corrections handled?
Typically, that's coming in for, let's say, a trade correction. We'll get the trade correction coming in from the market data vendor, which we're processing. That correction will include, this is the trade ID, and we'll apply it back into the kind of archive data that's already loaded. And when we're applying that, OneTick is bitemporal, so you can choose to see, do you want to see the original data? Do you want to see the corrected data? You may have multiple corrections coming through, and you can choose at what point in time. So show me the data as of the 7th of September, and you can see what the data look like. Now that applies for corrections, but also applies in terms of when you're looking at corporate actions. Are you looking at the raw data, or are you looking at corporate actions adjusted data? And what date up to the corporate actions are you including in your analysis?
Okay, I'd like to thank all the presenters for working hard on content and answering all the questions. And thank you to the attendees for showing up and answering such good questions. As always, to learn more about OneTick, please visit onetick.com. Please give us a call, like a demonstration. A recording of this event will be made available in the next couple of days, and we look forward to seeing you all on the next webinar. Thank you to everybody.